increasing our price target. We've been a buy on the stock, and we still think shares are a buy. There's two things going on. The first thing is what's going on in the industry. Restaurant stocks, they're back in favor. And there's not another company-owned domestic model with double-digit growth that's putting up positive comps. Shake Shack's in a category of their own. The second piece is the asset-light piece of the business that's international. Those 1/3 of the store base, those are joint venture stores. It really, they're just capturing that royalty rate. And we'd like to assign a higher multiple to that revenue stream.
I thought we were at peak burger, Nicole. We've seen some numbers come out that suggest that maybe there's restaurant scarcity, but when it comes to burgers, everybody's starting one of these new, very fancy burger joints.
Yeah, there can be a difference here between a company and a stock, certainly. But just thinking about the fundamentals behind burgers, we're a meat and potatoes country that's going to be burgers and fries. It's going to come down to culture, and they have the best culture to capitalize on these very iconic brands, locations, etc. There's a lot of other better burger brands that are out there, and they're suffering. Some are private, so sometimes we don't understand and appreciate those market share donors, and therefore Shake Shack's ability to continue to take market share.
I've never heard that phrase before. A market share donor. That's somebody who gives it up, I guess. Tell me how you get to this price target of $64.
Basically, we take that high revenue stream, we apply a peer multiple of the other franchise models out there that are trading at double-digit EBITDA multiples. It's a 40 multiple, but it's in line with the peer group. What this really does, and this is what's important, it allows us to pull down the core multiple by 3 turns, and that's important to investors because now we're talking about multiples that are in line with the historical range. So there's really just not as much of a premium in there as it looks like on paper.